My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job, not just to entertain, educate, teach, put in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The market cooled off today before rebounding into the close for mixed session. Dow ultimately sliding 67 points, S&P declining 0.03%, NASDAQ advancing 0.04%. But come on, let's face it. At this point, all eyes are on next week. When we come in on Monday, we'll know who won the election. So how do you respond? Simple. You should do nothing. Why? Because it looks like, once again, that we are going to have divided government. And with divided government, there's not a lot that the president can do. Never has been able to, never will. Biden might be more aggressive about protecting the environment or fighting COVID-19, less aggressive about cracking down on China. Of course, he's got all these different departments that can make rulings. But I wish I could say something simplistic, like sell your Trump stocks. Wouldn't that be easy?
Trump stock, Trump stock.
And buy Biden stocks. I guess I got to get a new button. But the only viable Trump stock is Nucor, the steel maker. And I would never sell that. They're a real good company. Sure, Trump's been very friendly to fossil fuels, but coal's a dying business. Letting oil companies drill everywhere has perversely hurt the whole industry because now there's a massive oil glut. Other than Chevron and Pioneer, I think the whole group remains uninvestable. Businesses do love Trump's tax cuts, but with divided government, Biden probably can't even roll those back. On the other hand, a Biden presidency might mark the beginning of a more friendly policy toward China. Personally, I think we need to take a hard line on the Chinese government. They don't play fair, so neither should we. However, Wall Street hates the trade war because it's bad for corporate earnings, and there's nothing bigger than corporate earnings, right? But this is mad money, not mad trade policy, so we have to factor in what it would mean to have, let's just say, a truce in the trade war. Still, we might have to put caveats on some of the stocks we follow, factoring in a Biden presidency, which seems very likely at this point, even if Trump never concedes the White House. With that in mind, let's get toward the individual stocks in our game plan. I'm betting the week starts off with a genuine bang with McDonald's reports on Monday. I think Mickey D's is doing incredibly well because it's the easiest place to pick up food in the age of COVID-19, right? I mean, they're the king of the drive-through economy. And the drive-through economy is what we find ourselves in. And then there's Plug Power. That's my favorite way to play the coming hydrogen fuel cell revolution. This is a company that spent years lost in the wilderness, but now finally has real orders. Fuel cells are in 35,000 forklifts. It's the real deal. After the close, we hear from Occidental Petroleum, Oxy as we call it. I want you to listen. You know why? Because it'll be an object lesson in why you need to avoid the oil stocks. Some analysts are going to get behind it. They always do. All our urges that you please don't get suckered in. Now, here's an odd one. We got IFF, International Flavors and Fragrances reporting. It's a really good company, but it's been a stock that's been dragged down by a tsunami of selling, and that's in part because of a very complicated deal with DuPont. IFF has actually a long history of delivering consistent numbers because consumer packaged good companies need their proprietary sense and taste to move merchandise. You know what? In all my years of following this, and I started following it in 1982, I've never seen a stock this cheap. Maybe you can get its mojo back this quarter when the DuPont deal closes. Rough one here, Simon Properties. They report they're the biggest and the best owner of shopping malls. Now, you may be surprised by how well they're doing, if only because Simon's likely to be the last mall standing, and that may have some cachet. They're trying to get out of a pre-COVID deal to buy Taubman, another mall operator, though I don't know how much they can say, because Taubman reports at the same time. You got to listen to this one because of all the pandemic-driven retail layoffs and store closures, and that's going to matter when it gets to even. We had a great unemployment number today, relatively, but you're going to start hearing about some layoffs in retail soon. Now, this week's really front-loaded. We're going to find out about the renewed strength in the growth stocks when we hear from one of my faves, Beyond Meat. Remember, I got a vegan daughter. And then we got Ring Central. Holy cow, we've been behind that one for a long time. Now, Beyond Meat's been missing quarters because they pushed prices down to make their faux meat offerings more mainstream. That is a terrific long-term strategy, even if it hurts short-term. That's what you want. You want their stuff to be under the price of regular beef. RingCentral is a cloud-based communication software firm with a video offering that competes against Zoom. Now, I've liked that stock for ages. If it can rally after the quarter, then it will tell you a great deal about this market's attitude toward growth stocks. Remember, it's been hot and cold. This week's been great for growth stocks. Then there are two speculative vaccine developers, and they've both been on the show. Novavax a while ago, and then Novio Pharma very recently. Now, they're both working on something for COVID. Worth watching for that, even as I suspect it's not worth wagering on. I like the word wagering when it comes to vaccines, unfortunately. There's too much competition. Still, I expect something good from Novavax. They've got a trial out in Asia, in Australia. And Novia, let's just call it Novio because I'm a polite fella, a mystery. Tuesday, we get two reads on housing, one from D.R. Horton, big home builder, and one from Rocket Companies. That's that mortgage lender that I talk about. With low rates in America's fleeing cities for the suburbs and also the rural parts of the country, if only so they can have more leg room while they're trapped at home during the pandemic, I bet they both have really good quarters. Then we've got results from another vaccine play still. It's BioNTech, which is a partner with Pfizer. Now, they seem to have the lead when it comes to mass production. I'm confident that Pfizer's going to have something good for us, by the way. I also like Corsair Gaming. We profiled that earlier this week because it feels like the son of Logitech, one of our biggest winners. This will be their first quarter out of the gate. They tend to be good ones. On Wednesday, Air Products reports, and we love these industrial gas plays. Their top competitor, Linde, posted a solid number. I was surprised the stock wasn't up, but I expect more of the same, if even better, from Air Products. The cannabis stocks went nuts today. You see, some of them, the volume of them was many times the size of the actual float of the company. But that's because the prospect of a Biden presidency. They're trading like he'll legalize weed nationwide, even though he only campaigned on decriminalizing it. Marijuana would still be a controlled substance, but you get the equivalent of a parking ticket rather than a prison sentence for possession. That's not really a recipe for selling gummies in the grocery store, though, is it? Well, most of the pot plays lose money. There's one that I like, an American one, Green Thumb, and that does okay. It reports after the close, and I bet the numbers are going to be terrific. Be careful, though. The cannabis cohort's currently up on a lot of fluff, almost as crazy as the electric vehicle plays. Yet much has to happen before things truly go their way. But I bet Green Thumb gives you a thumbs up and a roadmap. We'll also be watching Lemonade. No, it's not a drink company, a consumer packaged good company. It's a newly public company that's using artificial intelligence to shake up the insurance industry. I expect strong results. I feel the same way about GoodRx, another newly public company. They're all reporting this week. It is an app that finds you the lowest drug prices. Expect good things when it reports on Thursday morning. I use it. I use the company. It is pretty amazing. First quarter out of the gate tends again to be strong. After the close Thursday, we've got three biggies. Disney, which stock acted very well today, Cisco, and Applied Materials. I don't know what Disney can say right now that would be all that encouraging given the pandemic, other than how well the Disney Plus offering's doing. But they've told us that. Cisco's been struggling of late, but it's a cheap stock, bountiful dividend, paying you to wait. Applied Materials is part of a red-hot semiconductor capital equipment cohort. That group is loved right now because the semis are on fire, and I like that one, too. Finally, on Friday, we hear from one of your favorites, and in full disclosure, a company I do an online fantasy football program for a couple times a week called Bull Market Fantasy, and I'm talking about DraftKings. So it's difficult for me to comment. However, we know that sports betting was a big winner on Election Day, and anything that legalizes gambling is a big win for DraftKings, as well as, by the way, Penn National. With this incredibly positive week, earnings season is winding down, but there's still tons of important companies to hear from. Here's the bottom line. Next week, it will be unpredictable. My bias remains bullish. It's been a good call, hasn't it? Although we have to keep our eyes open because this is still a kind of a crazy market, and we have one of the best weeks that I've seen in years. Scott in Colorado. Scott!
How you doing, Jimmy? We love your action. My wife and I watch all the time.
Well, that is really nice. I got to tell you, and you are, Scott, why I keep doing the darn show. And your wife, of course.
Right.
All right? What's going on?
We went to cash about 4 months ago. The Dow was at 26.1, I think.
Really?
And, of course, the market goes right up, right?
That's the way it can be, sure. That's why I always like to do things in measured moments. But go ahead. Doesn't matter.
So we know we need to get the money back to work. But I don't want to be hasty now that we went through all of this.
Right.
So we're looking for some kind of market signal, a downtick, a thought process, something to help us decide when to get back in.
All right. Well, Scotty, let me tell you something. And we're going to get...
All aboard!
It happens. I mean, just think about it. 2 weeks ago, on Monday, we had people just throwing stocks away. They were just like, sell. And then we had an analyst on Monday say, and this Monday say, sell everything. Scotty, these things happen. And when they happen, what you have to have is that shopping list, and you put it in, maybe probably 25% of the money you went in then. And that's how we'll do it, slowly, gradually, correctly. Mario in Massachusetts. Mario.
A big booyah, Mr. Cramer. Thank you for taking my call.
Of course, my pleasure.
All right, sir. Well, I have a question about Sony.
Yeah.
I have a position in there, long-term option, and I'm wondering if I get out now while it's being run up, or do I jump off the ship? The PS5 is coming.
Sony is actually doing really well, okay? And I cannot countenance selling it. It's not. Now, I like American stocks more. Sony's chart is a little nosebleed. But Sony is a great company. It's always been undervalued. It's finally getting its true valuation. I want you to hold on to it. How about Gonzalo in Florida, please? Gonzalo.
Hi, super booyah. Jim from Miami, Florida.
Triple booyah to you. What's going on?
Not much. All good here. Safe and sound. So, Jim, what's the story on Peloton? Got in on the low 30s. It's performing amazingly well. Mm-hmm. And where's the ceiling here?
But Gonzalo, first of all, Monday morning, you're going to take out exactly what you put in. That's going to take out your basis, all right? Then you'll play with the house's money. I personally did not like the way the stock acted after the quarter. I thought it should have been up today. It was up big at one point, then gave it up. So I want you to be a little more wary that this stock may have run its course for the moment. But you know what? You've got a winner, and you can let it ride as long as you take that cost basis out. All right? You must do that no matter what, Gonzalo. All right, next week is going to be a tad unpredictable, don't you think? All right, you know that I'm still bullish, but I do expect, apropos of the second call, there are going to be moments to get in if you really want to. We have money tonight. With more people looking for new sources of entertainment, I'm going to sit down with the CEO of one incredible winning company and stock and CEO at Take-Two Interactive after the earnings, find out what the video game maker is seeing in terms of demand. Then, as COVID numbers continue to rise, could the stay-at-home plays be worth considering? I'm sitting down with the CEO, get this, of Twinkies. That's right, Hostess Brands. See how it's faring as people continue to stock their cupboards and eat the darn fool heads off. And an under-the-radar COVID-19 player you may never have considered. I've got the exclusive with the CEO of the #1 company to clean up the COVID mess, Clean Harbors. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.